Hello folks, this is Nate Paulson from Paulson Wealth Management with a March 2016 Educational Economic Update. In this video we'll talk about some of the economic headlines that influenced markets in the last month and give you some insight into what they could mean for you as an individual investor. Please stay tuned at the end for our standard required disclosure statement. So after a rocky start in January, stocks didn't offer investors much respite in February. Volatility was still the name of the game. However, we did see some positive news. So let's talk about some of those major headlines from the month. If you've been watching the news, you've probably heard a lot of talk from the pundits about whether or not we're heading towards a recession. Is a recession coming? How bad will it be? When's the last recession? Some economists are worried about a U.S. recession because of issues like low oil prices and low commodity prices and emerging market problems in countries like China, and fears that central banks may be out of tools to fight these economic woes. But these fears are not baseless. However, they don't necessarily mean that we're for sure headed for a recession. So there's also a lot of other things that we should consider here. One indicator that argues against a coming U.S. recession is the U.S. labor market. So in January, the jobs report showed that we had gained 151,000 jobs, and the unemployment rate had gone down to 4.9%, which in fact is the lowest that it's been since February of 2008. Another positive is that wages have been growing, and in the US, Americans are continuing to spend their money. So whenever we have wage growth and consumer spending, that's been a pretty decent sign for the US economy. So in short, we don't know if a recession is coming, but nobody else does either, regardless of what they might be talking about on TV. Recessions don't just happen for no reason, and we're taking these concerns seriously and watching the fundamentals very, very carefully while we manage our client portfolios. So plummeting crude oil prices have had a lot to do with the negative sentiment that we've been experiencing. Crude oil prices are so low because the world is awash in a glut of oil, and at the same time demand has been slowing, especially in places like China. And that's been pushing down prices. Investors worry that persistently low crude oil prices mean that the global economic growth is slowing and getting even worse. Low prices do cut into energy company profits, which is the first and near-term sign that we see from the low oil prices, as well as those companies with stakes in the energy industry. However, with 87% of the S&P 500 companies having reported for the fourth quarter, we see that overall S&P 500 earnings are down 3.5% for the fourth quarter. And however, if we remove the energy sector from that, they actually grew 2.5%. So not all that bad considering the environment. And firms that depended mostly on the U.S. for their sales did even better than that. So the overall economic picture wasn't as bad as expected last quarter. It wasn't great. But the second estimate of Q4 economic growth showed that GDP grew 1% in the fourth quarter, not the 0.7% that was initially estimated. So that's another positive. So while the economic growth slowed in the last 3 months of last year, it didn't slow down as much as economists thought. And responding to the concerns that people have about economic growth, the Federal Open Market Committee declined to raise interest rates in January and decided to keep them low to boost investor sentiment. While the Open Market Committee will meet again this March, coming up soon, most economists don't think the Fed's going to raise rates anytime before June. And the bottom line is that 2016 has been a rocky road for investors so far, and the volatility is likely to last for a little bit longer. We can't say for sure when, but it's going to be here for a little while. So while corrections and uncertainty aren't easy, let's remember that they're also coming after years of solid equity gains, and they're not unusual, so they're not unexpected. We're keeping a close eye on fundamentals and helping our clients make informed investment decisions based on the latest research and, most importantly, what their needs and goals are. If you have concerns about your personal financial situation, please don't hesitate to give us a call at 630-517-2950, and we'd be happy to speak with you to hopefully help. Once again, this is Nate Paulson from Paulson Wealth Management, signing off for the month of March 2016. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss anything specific about your personal situation, you have to give us a call at 630-517-2950. Thanks, and have a great day.